Welcome to weekly view on markets. Markets shrugged off the budget jitters and gained about 1.24% during this week. Market rally was powered by domestic institutional investors buying. FII sold in the beginning of the week, but on Friday, FII also bought in the market. But FIIs are net sellers for this week. I have looked at the chart structures and they look strong. Charts indicate further upside in the market. Sluggish earning growth in the quarter one for all the companies that have declared results is a worry for the market. Market is supported by money flow and liquidity. A lot of FII and DII money is coming into the market. It is providing a support to the market. If the earnings fail to catch up, it will drive the valuations up. High valuations will bend the rally, and we may see some consolidation in the market. There may not be correction as it is supported by high liquidity and money flow into the market, but there could be a consolidation. Investors and traders have to understand the impact of changes in short-term capital gain and long-term capital gain announced in the recent budget. So I will discuss the changes to help the investors and traders in this video. Nifty closed at 24,834 with a gain of 303 points, that is 1.24%. Bank Nifty dragged the market. It lost about 1.86%, that is 969 points. Mid cap index and small cap index were outperforming during this week. Mid cap index gained 3.33%. Small cap index gained about 2.48%. So we, the investors will see that their portfolio valuations have gone up despite there is overall negative sentiment in the bank nifty because of the broader market participation. India VIX has cooled down by almost 17.46% because the budget uncertainty has gone out of the market. That is why India VIX has cooled down. Now let us look at the sectoral performances. Almost all the sectors gained between 2 to 5% during this week. Only private banks and realty sector have seen small losses of about 1 to 2%. Pharma sector gained the most at 5.77%. Media sector gained about 5.74%. Healthcare, auto, public sector bank index all gained 4.5 to 5%. Consumer durables, manufacturing, commodities, consumption stocks, energy all gained around 3%. Infra, FMCG, IT sector all gained around 2 to 3%. So overall market breadth was very positive and chart structure also indicate further rally. In fact, charts have given a breakout on Friday. Let us look at the charts. This is the daily chart of Nifty. We can see that Nifty has given a big green candle on Friday. So this shows that market has given a fresh breakout. This breakout indicates a strong momentum in Nifty, and next week the positive momentum in the Nifty may continue. This is the chart of Nifty Midcap Index. Here also we can see the Nifty Midcap Index has taken the support after the fall at around this support line, and now it has continuously been going up for last three sessions during this week. It has given more than 3% rally in this week, and this last candle, which is a big green candle, indicates a fresh breakout. So this positive momentum is likely to continue in the next week. This is a chart of Nifty small cap index. Small cap index also has exactly taken support at around this support line, and now it has gone up. We can see the last three green candles. So with the Nifty and Nifty mid cap and all other indices outperforming, the small cap index is also likely to continue its upward momentum in the coming week. Bank Nifty index seems to be weak comparing to all other indices. Bank Nifty index on Friday has given a big green candle, but the upside in the Bank Nifty looks doubtful because many banks they are declaring results. The results are not quite good. This is the reason I have little doubt about the rally in the Bank Nifty. Now let us look at market fundamentals. Last week the Union government budget was announced and there are changes in capital gain taxes in the budget. Short-term capital gain on equity has been increased from 15 to 20%. So if anybody buys and sells within 1 year, that is called short term. And if there is any gain on short term capital, that will be taxed at 20% now. Long term capital gain on equity has increased from 10% to 12.5%. But one good thing here is that earlier there was an exemption of up to 1 lakh on long term capital gain. That has been increased to 1.2 lakh per year from this financial year. The security transaction tax, that is STT, on future and option segment, that is popularly known as F&O segment. On the trades on F&O segment, STT has increased to 0.1%. So government has made it costlier for people to trade in F&O. They want to reduce retail participation in F&O because it is becoming increasingly risky and lot of people have been losing money in F&O trades. That is the reason government wants to increase the STT on F&O trade and wants to curtail retail participation. Then angel tax has been abolished, good for the startups and new companies. Gains on shares buyback will be taxed like dividend income. So far, there was no tax on buyback income. Now, this will be taxed at par with the dividend. That means whatever capital gain is there on buyback, that will be added to the income slab of a person and like dividend, and it will be taxed at his slab rate. One more thing is that tax on real estate long-term capital gain was earlier 15% without indexation and 20% with indexation. Now indexation benefit has been abolished and it has been reduced to 12.5% from 20%. Government is trying to bring all asset classes at par. So going further, 12.5% will be long-term capital gain on different asset classes. So government had tried to rationalize the different asset class long-term. The investors need to look at these changes and accordingly plan their profit booking and taxation. RBI forex reserves is at record high of 670.8 billions during at the end of this week. It is up by 9 billions US dollars during this week. Foreign exchange rate is at 83.73 per dollar and dollar index is at 104.32. Brent crude price has come down. It is at $80.55 per barrel. Gold price also after hitting at around 74,000, it is now at 68,160 for 10 year 24 carat. FIIs have sold 4,721 crore during this week in equity, but on Friday they have brought. In the earlier during the week they had sold, but for the full week they are sellers. DIIs have been continuously buying. They have bought 8,119 crore during this week. So increased DII participation is seeing good rally in the small cap and mid cap sectors. The overall market looks quite good, and macroeconomic fundamentals parameters look good. Investors have to understand the changes in the capital gain structures, plan their investments accordingly. Mutual fund investors should continue their investments because the economy is on the growth path. Many agencies have revised GDP estimates for the next year from 6.8 to 7%. And corporate earnings are likely to improve in the coming quarters. And if RBI is able to bring down interest rates, it will further help the corporate earnings, and also that will result in a market rally further. So there is much to gain in the coming years, and being remaining invested. Investors have to pay 20% capital gain tax if they book profits in the short term. That is why it is beneficial, and also the gains will be better during the long term investing, and taxation is only 12.5%. So that is why I always advocate that investors should keep a long term horizon and invest in stocks or mutual funds. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends, give your likes. We'll meet again next week. Thank you.